All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for all of you being here with us this evening as we take a look at the technicals and the fundamentals to see what we could take advantage of in this Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. So right out the gate, if everybody can hear me loud and clear, please do me a favor, drop me a 1 in the chat so we can get this session going. All right, I think we are all set. All right. Thank you very much. I see the ones coming in. Give me one quick second. Let's go. So I think we are good. Okay. Just had to check one more thing. All right. So let's dive into the fundamentals and see what's going on out here in the wonderful world of Forex and the rest of the markets. But before I do that, Ryan, good evening, sir. How are you?
I'm doing well, bro. Glad to be here, man. How about yourself?
Glad to be here as well. It's a great day. Great day. So busy day, but a great one. So I'll take it. I'll take it.
Yes,
Uh,
sir.
so today, Tuesday, we had an FOMC member speak. I've been so busy, I didn't even get a chance to catch up on that one with Harker speaking. Ryan, did you hear anything about that?
I did not.
Okay, okay, that's cool. So we'll look in greater detail on that one. See if we can catch some notes, and then we've got CPI coming out in China. So at 9:30. So we'll see how that if that impacts the market. So I believe they are no longer. I did catch something today that they were no longer. I have to read about it in more detail. China is no longer the #1 exporter to the U.S. right now. I think it's they said Mexico and Canada. So gotta find out more about that. But we'll see. We'll see what the CPI comes through for China. We know that the economy is having a hard time getting on the right track. So we'll continue to see how it plays out with China. Fairly light today. Wednesday, not a whole lot. Got that bond auction going on Wednesday, so we'll see what happens there. Man, and then I mean Thursday we got CPI data. I know that's the talk right now. To see what that number comes through, try to get a idea of what the Fed's going to do moving forward. So we've got CPI month over month, year over year, and core, along with unemployment claims. So not, we've got inflation expectations for New Zealand. That'll be one at 11 p.m. So we'll see what happens with the New Zealand dollar later on in the evening, but fairly light compared to some of the other weeks. But that's how it goes. So that's that on the calendar. Over on trading economics, Wall Street is lower on bank rating downgrades, right? So Dow Jones closed 158 points lower on Tuesday after tumbling over 400 points during the session, while the S&P dropped 0.4%, the NASDAQ 0.8%, as bank shares were pressured after Moody's cut credit ratings for 10 small and mid-sized lenders and warned it could downgrade another 6 big U.S. banks. So have to read more in detail on that, but that looked like that hit the market pretty good today. But technically, we're in an up retracement zone on a lot of those indices anyway. So it kind of matches with what we have drawn up technically. So we'll see if we can take a look at that today. We got oil rebounding. All right, rose to around $82 a barrel on Tuesday. So hovering around the 4-month highs. We know we've been looking at key resistance on oil. And we see here that U.S. debt reaches new high. Okay. So consumer debt in the United States rose by 16 billion or 0.1% from the previous quarter to a new record of 17 trillion in the second quarter of 2023. So we'll continue to watch that, right? Debt is getting up there. Consumers are starting to go into their credit. That doesn't always bode too well. So we'll see what happens in the near term on that US debt. The Canada trade gap wider than expected. Somebody tell me, is that a positive thing or a negative thing for the Canadian dollar? You take us, what we have in the chat? Negative. All right. Anybody else? Everybody else just neutral. Just see you're gonna ask me. All right. I see defects are negative. So, yep, can be negative, right? For the currency, right? Especially if that starts to become a trend when a country is importing more than they're exporting. Why is that? Could that be a negative for a currency? You take it. The why is always important.
My thought would be less demand for the currency.
Ryan, you are correct, sir. Right? Less demand for the currency, it can lead to less demand. That's what that's showing, right? So if we're exporting, right? I mean, if we're importing more than we're exporting, right? So that's less demand, right? For the currency, because in order for people to buy from Canada, they have to convert their currency to what? Somebody tell me in this group. The CAD. That's right, JC. That's right. So we click on this and we see so it was down 2.2% less than the previous month, right? So they sold, in essence, they sold less, right, than the previous month. As a matter of fact, 2.2% less. They saw a drop in sales. What is this saying? Gold, silver, platinum, and machinery, right? It's where they saw a decrease. But on the other hand, they bought. So when you talk about what they purchased, they did purchase less energy and medicine, right? But more metals, gold and silver, right? So we have to read in greater detail on that. We know gold and silver could be used for what? Well, we know gold can be a safe haven, and especially when you have economic concerns. But gold and silver are also industrial products, right? Go into a lot of industrial products. All right. So you can always go hedge. Yep. You can always go deeper and get more granular with these reports if you're willing to do the digging. It's actually quite fascinating. So they imported or bought 64.4 billion in goods and they exported 60.7 billion. So that's 2.2% less for the CAD, right? So that's that. And we take a look at the US, the trade gap. Okay. Lowest in 3 months. Okay, so we can see the US trade deficit narrowed to a 3-month low, 65.5 billion in June, from a downwardly revised 68.3 billion in May. So I'm gonna ask the same question. Somebody tell me. That be seen as positive or negative for the US dollar? Positive, right? Right, it's almost the opposite. Okay. So we bought fewer things like, what is this? Computers, artwork, certain types of oil and diamonds, right? So why would they track artwork have a conversation. Anybody?
That's an interesting one. Why would they track artwork?
Mm-hmm.
Maybe because it appreciates in value.
It does from a person that's buying artwork for the reason and why they buy it, right? Yes, I'm stuck on that one, but hold value. They do hold value, right? They even have like things like Masterworks IO now, where investors can get in and buy fractions, right? Of artwork and things like that. But when they look and they track things like that, because we start to look into what's the consumer sentiment, right? So we saw the U.S. debt, household debt is going up. So when times get tight, right? Times get tight. Sometimes we spend less on those type of things, like artwork, buying artwork and things like that. We start to tighten, our wallets a little bit, and we're not so readily, uh, willing to buy things like artwork and those type of things. So that's why they track. Okay. And oil, right, could be a demand thing. The US, maybe, we've got a whole thing with alternative energy going on. So maybe, could be several reasons why with oil, right? Especially it could be seasonal demand, which really doesn't necessarily fall in line with the season that we're in, right? But we are doing a lot with alternative energy here in the United States. We bought more gold, right? Is what this report is saying. Okay. Again, safe haven. Okay. Economic uncertainty. Industrial use. Okay. Which when you see things like that, especially for like industrial use, you start to think like, well, are new homes being built? New commercial buildings being built? What's going on, right? Economic expansion, contraction. All these things matter. What's one of the largest, for those of us here in the States, what's one of the largest exports for the United States, if not the largest right now? Anybody know that?
I don't know that.
Oil, yes, is starting to be one of them, but like cars, right? Vehicles, one of the largest exports. In fact, it might be close to number one, if not number one now. Right? So it also says, right, less computers, fewer things like computers. And that could be due to, we have certain times of the year where you have tech releases, new things coming out. So it might be a time where it's not a lot coming out, right? No new iPhone model just yet, right? Things that really, really drive tech and tech sales, right? So just some things to think about, right? When we look at these reports. Enjoy your import export list is downstairs. So just wanted to talk a little bit more in detail regarding the fundamentals as we swing trade and do things like that. So it's one thing to know, hey, whether it's positive or negative for the currency, but also why, right? So hope that helps. But that's that. So let's switch over, take a look at the DXY. What I got going on here.
Wait a minute, I had a question.
All right, what's the question?
So now we're getting negative news in Canada, but earlier today, I could have sworn, because I was kind of in and out earlier this morning, it was said that JPY was being held as a safe haven. So is that making Canadian and the JPY weaker pairs right now?
No, I mean the yen you can see strengthening from the yen. You saw that correction, right? Because the yen, if it's a safe haven, that means more people are transitioning, right? into the
Yeah.
safe haven. And a lot of that I had a feeling had to do with the downgrades of the regional banks. Right. That came through. Just a reaction, a market reaction to that. Earlier today that drove that correction, right? But we always keep in the back of our mind that there's been no policy change from the Bank of Japan. So these type of things kind of help you to understand, right? So you don't get so freaked out, and so that you're not so quick to change your directional bias that you may have, right? When you do your fundamental and technical analysis and you develop a strong bias for something, you're not so, when you understand things fundamentally, and what the impacts are, you're not so quick to be willing to change your bias, right? You start to realize like, oh, this is just a correction because, right? And are we ever right 100% of the time? No, but it kind of helps you with your patience. It gives you a little bit more stand power when it comes to holding those longer swing positions, which a lot of us are working hard to do. Some of us not. Some of us we're scalpers. We like trading on the lower time frames, and that's fine. It's something for everybody in this group. There's a lot of ways to skin a cat in this market. So yeah. Any other questions?
No, sir.
All right. Anything else? I know you were busy today too, right? Anything else that you might have caught that's out there floating around fundamentally that I might have missed?
No, I was sliding through just the back end looking at some of the additional articles, but nothing yet. I'm trying to do a little bit of research on the bank downgrades and what banks they could be looking at in the future. So I'll see if I can find some stuff by the morning on that.
Okay. There was one who was it from? It wasn't JP Morgan. It was Morgan Stanley, one of the top guys. I heard them talking yesterday, and their positions, they're not sold on none of this this no recession, soft landing stuff. So
Jamie Dimon isn't either though.
no, wow. Yeah, I didn't read that. Yeah, they're not going with the noise on this one. Their positions are structured preparing for a recession.
Yeah.
In a lot of cases, or tightening, I'll say more tightening. We're definitely not out of the water yet. And then from their, perspective and what the data that they're looking at, he was pretty adamant about that. So we'll see how that goes. So for sure. So we'll see what happens with these. We saw in that report 6 big banks too might get downgraded. So that's going to be interesting to see who that is and what that does to the market if Moody's does that. But I know with the U.S. downgrade, the market just marched right through it. This one had a little bit of a stronger impact today. So we shall see. So let's go. U.S. dollar, right? Still showing some strength, moving back up to that weekly weekly resistance level. So we'll see if we can continue to get strength out of the U.S. dollar, or if it's just gonna turn over and start to move right back down after a little bit of, a little bit more of a bullish push to the upside. So we'll see how that goes. But right now, hey, we trade what we see. That dollar's been pretty strong. Let's dive into some pairs because I got some that I want to look at. Then, if we have time, we'll definitely dive into some other pairs that people may have their eye on. So, with that being said, let's take a look at this Aussie Swissy. And we know that we have been pushing to the downside, right? Aussie's been getting punched in the gut a little bit. We know what the Swiss National Bank was doing with the currency that was adding to the strength of the Swiss franc. So you can see we broke that weekly support level, but now you started thinking in your head, at some point, do we lose some of the momentum to the downside and we start to correct, right? Because the market moves in waves. So this is how it's moving here. And we are bearish. So that's the long-term trend has been down. But when we're looking for those intraday plays and things like that, As we move down through the lower time frames, there may be opportunity for a correction trade or two. So here on the 4 hour, right, we've got this rejection off the 236. And we pushed just a little bit beyond that V boundary, but now we formed a 4 hour low in this zone, right? So I'm going to move this down too. I didn't have that in here earlier. Okay. So we've got another low there of support. But when we come down to the 1 on the smaller wave, which is where we drew the trade idea up, we're right here at this 118, 127 zone. Okay. Shallow retracement, less than the 382. Price hit the 236, broke to the downside, broke the B boundary. And you can see we're stalling right here in this 118, 127. That's the 80-20 opportunity. Now, I moved the stop in. Of course, we can keep the stop wide, but I moved the stop in because when I saw the opportunity, it had already made a good push to the upside. Came back above this 4 hour support at 157.04. And so I'm thinking in my head a possibility of a pullback, right? And then a continuation. Okay. So just continue to keep an eye on this one. We may or may not get that test back at that 4 hour level before it moves up, but just continue to keep an eye on that one. That could be a big one if we can get some positive momentum to the upside. If you want to continue short on the Aussie Swiss, right, then we look for opportunities for high prices, and then we look to get back short. Okay. So if we come down to the 15, okay, we can see where on this 15-minute wave off of support, here's the push up, and now we're in the middle of a pullback. So we're just shy of the 50%. We'll see if it wants to come down and retest that 57.04 level and get long, right? So that's going from the 1 hour where the setup was found and then down to the 15. So we'll see if this correction time for the Aussie Swiss. Any questions on that setup?
Some additional confluence on that, bro. On the
Yep.
daily, I also got price in the 118, 127 zone.
Are the fibs running off this level, off these levels?
So I ran my fib. I started it at around 78,000 back
You're way up.
yeah,
Okay.
September 24th, 2017.
Okay.
And ran them down.
Larger.
Yeah,
You said
that
September?
high that you actually, the high that you actually ran
right
that
here.
manual fib from.
Mm-hmm.
Yeah. Over one more, sorry. The next cluster. One more. There you go.
Oh, okay, I got you. I just ran the manual and after that last one didn't fire up. Right? Because we had that makes sense to just coming in the confluence. We actually spotted that. Did you see how we had this ABCD wave here?
Let me see what happened here.
See, it never gave another fib, but that's okay tracking that smaller wave because it just gives additional confluence to it. So you never got that where I ran that from way up high here.
Yeah, I see where you got that now.
It gave, and I think because of how impulsive that move was when the bottom fell out of it, it seemed like the algorithm never caught that new fib. So I just ran it from the high price, right? The C from that old fib to the D extension. So I've got that larger one running like that. But it's cool to run the smaller way. You just track it the smaller way. So that's definitely additional confluence because we are in the, it's back in the buy zone, right? Oversold.
Yeah.
So for it to settle down in this zone and then reverse, could be a huge move. So let's hope that let's just hope that it plays out. For sure. Yeah. I like it. I like it. So that means if it does catch at that low on the fibs that you have running, this can move up for a while, maybe even take out, if it decides to start climbing higher. So we'll continue to watch the fundamentals and see if we could build a case for that going forward for a deeper correction like that. Yep. Good stuff. I love it. That's it. Any other questions on this Aussie Swiss? Comments? Anything? No?
No, sir.
All right. I had this Aussie NZD marked down. I've got to go back. Just writing up some quick notes on it today. Oh, this 4 hour. Just off this fib I ran, you can see how it's making this swing off this level. So it didn't quite get back to support, but it's pushing to the upside. So my question is, if we get back above, because it seems like it may be a correction time right now for the Aussie when I look at them across the board. So if we get back above, right, this 107.99, we break through that 4 hour level, it might push higher. So you keep an eye for a break and retest on that, because it technically is running it now. It's kind of moving all over the place, that range. That's why I just ran it off that fib there, but you can see how this is, how that's been moving lately. So I just wanted the last impulse leg coming into this support level. And that's pretty much where we got it. It's pretty much double bottoming right there. That's within the same zone. So I'm wondering if we can get a break and retest on that, if it's going to keep moving higher into the zone. So that's an opportunity there. Or this could be a signal that, hey, it's moving to a higher price and I can get ready to possibly short in the future on this Aussie NZD if you're going to hold a directional bias that is bearish. But right now, it's kind of just ranging all over the place. So if I get a break and a retest on it, I'll probably take it. Probably will take it to the upside continuation. That's just me. That's just me. So this is the 1 hour here in these zones. See how it's starting to make that climb. So we shall see what happens on that one. That's not a favorite, but just wanted to alert everybody on that in case you wanted to make some type of play. That's the Aussie.
I dropped my cloud on the 1 hour on that one. And
You
we got
above
a
it?
break of the cloud on the one.
So I might be in the right mindset with that break. Eh?
Yeah. Well, yeah. Because that break was above.
Oh yeah.
So,
Oh yeah.
right. So I'm with you on that thought.
Yeah.
The double bottom gives you another piece of confirmation. Yeah.
So on my 1 hour, I'll play it on the spot. Because I'm tracking them to the downside because that was the last major. So what I'm gonna do is I'm gonna leave this like that. I didn't even think about putting the cloud on that. Appreciate that. Yeah, we got some movement. We got TK crossover above the cloud. Our lagging span is above price and above the cloud. We might see a little run on this, right?
Yeah.
It's an A6 retracement, so there. So I can even, so that pretty much falls in line, right? If we get that's the extension there to this fib. So we break it, that's almost saying like, right, a break and a recess, because that'll give you a new AB boundary pullback. So we'll see.
Did you look at your daily also?
Yeah, it's bottoming out.
Yeah. But also I got a fib running off the low.
Oh, from this low here?
Support, yep. And they had a 618 retracement there.
I like it. I like it. So this one might make a run. This one might be ready to make a run. We'll see. So keep an eye on that one, everybody. Starting to move long. Let's see. All right. Maybe it's time. Maybe it's trying to get back to the top of the range. Okay. See which way it wants to go. Appreciate it, Ryan.
No doubt.
All right, let's take a look at this. Go back, take a look at this CAD yen. We have been primarily long against yen crosses with yen crosses. So this is the daily. Okay. Long way to go. That's going to continue to push bullish. Right. So we kind of move sideways, but we're starting to bottom out here a little bit. See if we can continue with the upward momentum. Come on down to the 4. Okay, got 2 swings going. So this is your main capital fib here. And then when we got this break of this high and this pullback, I wanted to run a sub fib. So either way you look at it, we still want to look for price to make moves to the upside. Keeping an eye on this situation with these banks too. Right, that can lead to some more strength in the yen if people start to continue to get spooked out a bit and get concerned. So that's where we are. So Ryan, you're still hold long on this, right?
Yes, sir.
Okay. So I was looking at this from the 15 because if we look at it here on the 1, you can see how we broke above and we're kind of retesting this 106.53 level. So when I see stuff like that, I'm like, let me drop down to see if we can catch a smaller wave to maybe eventually add to a position, or if you're looking for an initial entry. So I just ran it off this impulse leg to the up. And we've got a fib sitting right in our sweet spot. We're holding above that 106.67 level. So nice bullish candlestick here. Okay. It broke and closed right back above that level. So it didn't retest this 106.67 as resistance and hold. It broke back above it. All right. So I am staying bullish on this CAD yen. Everybody see how that works moving through the time frames? Yes, no?
Yes, sir. Joyce says she's still holding.
Yep. Yeah. Okay. Good job. Good job. So that is the CAD yen. I want to go and take a look at this Euro Aussie setup that we posted this morning. We were talking about this one during the pre-New York session. Okay. Still moving up. All right, seems like forever ago we spotted that morning star on the weekly time frame. Weekly support. Look, past resistance became future support. Okay. Fibs or no fibs, that's moving up. Okay. You know the Aussie's been taking a beating. Well, we know at some point price likes to correct. Now, we came into a 4-hour de-extension. Congratulations. If you continue to ride that, you held it. If you took that trade off that double bottom at weekly support. Okay, talked about that a while ago. But you can see the fib, smart fib is no longer highlighted because the extension is hit. And we're running into a lot of traffic. Okay, a lot of traffic there. You got a monthly level, some daily levels. So when we come down to the 1-hour chart, it's, hey, are we due for a correction? 4-hour de-extension hit, prices getting kind of high, hitting some higher time frame levels. And when you line it up with the 1-hour fibs, you got an 80-20. Okay. So far, so good. Okay, so out of that zone, we marked it up this morning. Right there, it's 118 pips. That's a great week for a lot of people. All right. So if you're in that, manage your trade. manage your trade. If you're a shorter term trader and you took advantage of that, you might be out of the trade, right? We've got a downside target that's approximately 300 pips, to the downside. So we'll see. We'll continue to watch it bounce around and do its thing. Any questions on the Euro Aussie?
No, sir. I took profit on my long trade. I didn't take the short. I'm just watching to see how things continue to move. Obviously, if we get these Aussie retracements that move down makes sense. Might look for a low price to get back long at some point.
For sure. Yeah, I wasn't sure this morning when we were talking about it
Yeah,
because I didn't see the Aussies line, making the moves that they're making now. So I was going back and forth on it, like, so I was thinking the same thing. I took a small position, but I was thinking the same thing, like maybe let it push down and pull back a little bit, see if it's serious, because I hadn't seen across the board, because it's pre-New York, right? I hadn't seen across the board those Aussies moving like they were today, but that small position is playing out pretty good so far. But it's a long road to that 382, so we'll see what happens. We'll see what happens. All right. Any questions on this Euro Aussie play? That moved 100 pips quick, but that's a big mover, that Euro Aussie. So cool. All right, we're good. All right. Wanted to peek in since we're in the Euros. Wanted to take a look at the Euro. Okay. So overall, right, still for the most part. Now we're sitting high in the zone. But I can't remember if it was doing a session or a weekly ritual when we spotted this wave here. It was a while ago now. But we got the breakout and then we got the retest. Right. So I played it off of this zone here. Now knowing this capital fib is still sitting, but we double bottom. We've done all types of stuff on this play. But it's stalling right here at this 147, 46 level. So this was a good move so far. That was the right play. But I wonder if we're gonna get, above that 147.36. We could, right? With that the Canadian news that came out. We know we saw a rebound in oil, but it is testing a pretty high price right now. So I wonder if the correction is gonna come. So we'll continue to watch this. Ryan, what are your thoughts on this EuroCAD? Are you in this at all, playing this at all, or?
my bad. I was on mute. Yes, I'm long. I took that off that
Yeah.
low. I'm still sitting long on it. My take profit is the D extension on that for 149,561.
Okay.
Yeah. My entry on that was 145,246.
So you've been in that for a minute. It's good. It's good. Been in that for quite some time. Yeah. Yeah. I still like it long too.
Yeah. But I'm with you on watching those levels to see if we're able to break through them and continue that long push.
Yeah, do I have anything on it? When did I stop it for? That Euro's started to get a little wishy-washy.
Yeah.
So, but I mean,
pressing sideways.
Yeah. Yeah. But I mean, at the end of the day, they did hike rates. They still have a lot of work to do in regards to inflation. So continue to keep an eye on that. That is the Euro CAD. Want to move in on this Euro Swissy. Take a look at what's going on, right? So that's overall crown from ages ago. And it's continuing to have issues, right? Back below that 96.70 level. But looking across the board at some of these Swiss pairs, we might start to see some relief, right? A little bit of a decline in that Swiss bullishness. And we're holding here at this support level. Now we're in the sell zone, so it's going to be interesting, right? We're moving a little bit sideways, But as we move down through the charts, I am still holding for this 382 push on the 4. And our 4 hours back in the buy zone. So my idea on this is to catch that C to D move, right? To that D extension that'll put us right around that 382 on us. So we'll see how it plays out, but it's stalling quite a bit. And the 4 hours managed to work its way back into the buy zone. So I would like to see that move in my direction for that counter trend play. So that's that. Nothing really is kind of sideways on the time frame. So any questions on that Euro Swiss?
No, sir.
All right, kind of just stalling a bit. You know, got a good push. All right, but now it's just kind of just stalling. So we'll see how that plays out. Until then, we will move on to other pairs. This Euro GBP move, I think this is stalling too last time. And we had talked about this during the ritual on the 4. And it's doing what it normally does. Can't quite make its mind up. Right. When it took out the high and it pulled back, I liked it at that low price because it gave a nice push off that monthly 85.46 level. See, I was respecting that support level. So I was thinking, all right, well, Euro bulls might take over, but we're kind of just doing the Euro GBP thing. Just kind of stuff. So I will let that one continue to ride out to see what happens on the Euro GBP. Don't take too many opportunities to trade it. Typically, this is why. So that's the you're in it. Yeah, I needed to move. I want to see that move. It moves slow as molasses, so not a major move at all. Maybe it'll surprise us. We shall see.
I'm still sitting at the
I figured the upside on that from where it bounced off that monthly, the upside on that was pretty good. We can gain some momentum, but yeah, strikes again. So that's it. Let's move beyond that. Euro JPY. I want to take a look at that. And we are continuing, right, to push. Look at that. Closing in on the monthly D. Not quite there yet. Okay. Look at it just hovering. But you can see, right, we're almost at completion. It's trying to get there. It's trying to get there. So that's a daily support. Here, right? The daily support there. So we're pushing along. It's an overall move, right? So we've been right. It's continuing to push to the upside. Continue to ride those waves. Okay. Here we are on the 4. We'll pull back to 50%. Daily support has resistance becoming future support. Fib and no fib. We've got to see that. Okay. So that's an OB high, right? Which is resistance. Acting as support, we got that bounce. Okay. So we're moving in though, right? On that extension, we're getting close. But when you come here and you look on the 1, the smaller wave, got some room. You see that? Right. So you can always move down through your charts if you miss something and your bias is still in the direction that you think price is going to go. Always come down to the lower time frames and see if you can catch the wave. Catch a wave. So we continue to move bullets to that extension. There we go. Right there. We got a 50% pullback. And we're holding above that 156.68 level. Okay, tried to dip a little bit, but right now it's still moving long on the 1 hour. So let's see what comes of it on that Euro JPY. Any questions?
No, sir. I'm waiting patiently.
Wait for that extension to get hit.
Yeah.
Mhm. It's good. It's good. Patience pays. You make money either way, right? So that's your idea. Wait for that extension to get hit. Get that reaction on that counter potentially. All right. Any questions on the Euro JPY? Going once, going twice. All right. On to the next. So yeah, so you all see how we can set these charts up and we can just let the trades fall in our lap. That's swing trades. Right? Even if you're trading on a lower time frame, right? 5 minute, 15 minute, set your charts up, look for your sweet spots to be in. Okay. Do your best to form a directional bias. If you come across a pair and you can't form a bias on it, leave it alone. Most likely it's choppy and moving across the middle of your screen. Right? Sometimes we can get range plays out of those, but if you're in doubt, stay out. Right? So let's move on to the Euro NZD. So we are bullish, right? Pushing high, right? We're getting high. Look, we just took out that 187. Okay. Look at that. It's 382. And we're moving along. Okay. 94%. Okay. Momentum may be slowing to that upside. Eventually, here's the 4. And we stayed above that trend line. Look at that. That's beautiful. 61.8 zone, 170, 170. That's blue. That's a weekly support level. And it's off to the races. And we're almost to that 4-hour extension there. Okay. So yes, it can look wild and crazy. But at the end of the day, it's moving in the ABCD way. Okay. Moving in the ABCD way. Isn't this cool, right? This tool. Okay. So that ABCD, you see how it's got a 382, 61.8 on there already? Because why? Our C becomes our new A, and our D, wherever it lands, becomes our new B. We start the game all over. So you see this alternate ABCD pattern, harmonic pattern. All of your harmonic patterns are derived from the Fibonacci sequence. That's why we teach it fundamentally in the group. Okay. So that's that. So we're moving along. We come down to the 1. Okay. You can see it's trying to do this. It's doing the dance. We already got a 61.8. I was watching this on the 15-minute, right? Because there's that extension. Got a 1 hour right before. But I'm trying to see if we can catch a position to maybe add to it to get involved. Broke this trend line. So now the question becomes, because I was looking for it to possibly push deeper, right? We almost got a 50% retracement. But it really broke that trend line nicely since I marked this up. I was looking for a bounce in something like this and a continuation down. Okay. But now, what we want to see, all right. Somebody tell me what I'm thinking. We got a trend line break. Okay. It didn't push deeper, right, into that buy zone. But we did break a trend line and we broke above that 180.74, which is a weekly level brought all the way down. So it tested it. Okay. As resistance. We didn't keep a continued move. We broke it. So somebody tell me what I'm thinking now. Has resistance becoming future support? That's it. That's it. Okay. So now that's what I'm thinking. Has resistance becoming future support? So is this going to pull back either on this 15 or on a 5-minute, right? And retest that right at that 61.8 and continue long. Okay. As it works its way to that extension from the higher time frame. So if I come out of here and Management charts and layout, and let's put a Euro NZD 5-minute chart on here. So this is how you can potentially, right? You like trading the lower time frames, like, have you guys trade on these higher time frames? I like the smaller time frames. That's okay, right? That's okay. That's good that you like it, right? So we clearly have a trend line. So now it's just a matter of whether or not this will continue. So whether you're tracking that clean from the 15, or you're looking at the 5, right? And you like trading smaller waves. See the beautiful thing about the fibs, the way we trade them. The sweet spots are going to be the sweet spots. The risk to rewards are going to be the risk to rewards. No matter whether it's a 5-minute, 1 minute, 15, 2 hour, 4 hour, does not matter. Waves are waves. Okay. So this is a 5-minute setup. We got an A6 pullback. Okay. If this wants to push now, if it pushes higher, that doesn't mean that our higher time frame, our 15-minute fib is out of play. It just means that this is going to push higher, and then we may see another correction. But right, so think about this. I'm trading on the 5-minute because it's all about your risk to reward. It's all about your risk management. It's all about your edge over time. So if I like trading 5-minute waves and I like trading 61/8 or deeper, this is my setup. Right? Now I got an A6 retracement. So this is going to be my TP. See that there? If I'm planning on the 5. Okay. So I'm following my trade plan. Price hits my zone. What's next? Simple. Either I win or lose the trade. Period. That's it. If this is my chart. Questions? No.
No, sir.
Okay. Find your wave. Right? If, right, this is a very smart group, very smart. If we give you something like 80/20 that we find on the 4-hour time frame. Okay. So we've got our A/B boundary. Okay. Show you guys the magic in this, right? So we got our A/B boundary. And we get a classic 80/20 scenario. Price, all right, we'll make it clean. Hits the 236. Breaks the B boundary, pushes down to the 127. What's important, everybody, is the zone, the sweet spots that we trade. How you enter that, the time frame that you enter that, or how you, or the waves that you want to trade is totally up to you. Right? So you don't have to be Benny and Ryan. And if this is my target, this 382, okay? And this is why we teach you the entire framework, right? So you can be independent. That's where the true freedom is, right? We don't want you to need us, right? Learn and believe in yourself. Get comfortable with yourself and what you like. So this is the zone. Why is it the zone? Because when we trade the 80/20s, we're looking for counter trend trade reversals. We're looking for price to reverse. Now, if we find this on a 4-hour chart, okay, 4-hour chart, it's totally up to you where you want to play that. That's why we say, hey, work hard, stay in the game long enough to develop your trade. Okay. So if you say, I'm in a 4-hour 80-20 zone, I like trading on the 5-minute. Well, guess what? Take your target, this 182.28, pull that target down to your 5-minute. And you may say, well, I like trading trend lines. Okay. Draw your trend line on the 5-minute. Like so. And if you're sitting on that 5-minute chart, and you know from the 4-hour, I'm in my zone. That's why I'm looking at this position, this setup anyway. Then when it breaks and it forms a high and it pulls back on your 5-minute and it hits your sweet spot, take the trade. If your sweet spot is your sweet spot, take the trade. Stick to your process. Don't second guess yourself. It's about your edge over time. We already know we're not about to win every trade. But if these are my sweet spots and I trade enough, I know that over time I have an edge, whether it's 40%, 50%, 60%, my risk to reward is 3-to-1, whatever. And I'm using proper risk management. Take the trade. That's the only way you're gonna find out whether or not you have an edge over time. Sit around playing with your thumbs. Take the trade. Journal it. Document your results. Right? Did I take that trade in my sweet spot? No, it wasn't in my sweet spot. Well, why did I take it? How was I feeling? What made me do it? If it wasn't part of my trade plan, why did I do it? If it was within your trade plan, take the trade. Take notes. I lost this. Right? I lost it. Is there anything that I didn't see? Yeah. Okay, then. Well, chalk that up. Okay. That's how you have to think about it. That's how you have to think about it. Every trade is not going to go your way. Okay. It's all about having a proper expectations. Everybody follow me on that. Drop me a 2 in the chat. We're good. All right. So if you want to play it off the 15, you're looking for the same thing. That's the beauty of what we do. No matter the asset class. I'm not worrying about seasonality or none of that stuff. This market moves in waves. If some seasonality kicks in, and oh, the volume is a little bit lower than during these moving waves, it might just move a little bit slower, but it's still going to move in waves. Any questions before we wrap things up tonight, everybody?
No, sir. Great session, bro.
Appreciate it. Appreciate it. Ryan, anything before we close out?
No. Great session. We'll see you in the morning.
All right, everybody. That's that. See everybody 6:30 a.m. Eastern Standard Time for the pre-New York session with my awesome partner, Mr. Ryan Carthage. Keep your eye on those setups that we went over, everybody. We're still in some that we were in over a week ago, 2 weeks ago. Keep an eye on those as well. And we'll see you tomorrow morning. Good night.